Now we're going to bring in Avery Shenfeld from CIBC, the senior economist there, to get a little more reaction to the jobs market. He's standing by in Toronto. Avery, first of all, your reaction to this number today. The market seems relatively encouraged by what is still a weak jobs market, but a better than expected report.
Well, I think that if you looked at the bond market, for example, you were starting to get people trading it as if we were on the cusp of a double dip. So certainly these sorts of numbers suggest that the economy is still growing. That's the plus side. And in fact, for those fearing deflation, we also saw a pretty good increase in average hourly earnings, which doesn't also tend to go with falling prices if wages are rising. Now, that's the plus side on the spin. But if we step back for a moment, we still have private sector employment growing at about a third of the pace that we would like to see in terms of the last 3 months, compared to with the 200,000 or so pace we would need to start really making a dent in the unemployment rate. So this is better than disaster, not a recession, but certainly not nearly good enough.
At this point, do you think, Avery, this is Mike McKee, do you think that we're going to start seeing a pickup in job creation, or do we continue to muddle along? Was there anything in the report that suggested things are getting better?
Well, what you'd like to see in a report like this is that the cyclical industries, the ones who go up and down the business cycle, were the ones hiring. We didn't really get that. Construction was a little bit better, but we saw manufacturing shedding jobs. There's some seasonality quirks there, but it wasn't a gain. And where we did get job creation is things like education, health, that are not particularly cyclical. So I would say on balance in this report, it wasn't really that encouraging. And in fact, I think what we're getting is the same kind of job numbers that are in line with the GDP numbers. You know, if the economy were growing faster, we'd say, okay, just around the corner, we must be about to get a big dose of hiring to catch up with that. But the economy isn't growing that quickly, and business hiring is really just simply reflecting that.
Avery, again, 67,000 private sector jobs, however, increasing to 9.6. How important is that figure when it comes to the psyche of the American public, or someone who has a job but is worried about losing the job, or somebody who's still out of work?
I think Americans know that the 9.6% unemployment rate that you're quoting is just the tip of the iceberg, that we've had many, many people leave the labor market, in effect, give up looking for work. So they're not being counted here in that 9.6%. In fact, some of the broader measures of unemployment that include those discouraged workers actually ticked up a bit as well. So I think Americans recognize that in terms of employment, particularly if we measure this from the previous peak in employment to where we are now, this is by far the worst recession of the post-war period. Much, much worse than previous recessions. And so we've got years to make a comeback here.
Years to muddle through it. Avery Shenfeld, chief economist at CIBC.